All right, welcome to the Hurley Investments Market View Commentary. My name is Kevin Hurley. I'm going to walk you through our commentary today. It's nice that it's a holiday. Nice that we have Memorial Day today. And for all intents and purposes, the best thing to tell you is please remember those who have made our freedoms possible. When I think of that on a day like today, it usually brings me to, cheers to you too, Jeffrey. It usually brings me to why you're in the market. And if I can ask this group, why are you in the market? There is a variety of answers. And there's 14 of us here today, so let's go for it. Let's find out, why are you in the market? And I will go ahead and I'm going to currently at 120. I'm going to keep it, but let me see. Thank you, Abraham. And I see some of you typing answers, so I'm going to go first. In all honesty, why I'm in the market? Retirement. To buy things I probably wouldn't if the returns weren't there. I'll be honest with you, some time back, I was in the market to make some quick money to get the home I want, or the home I currently live in. And what I thought was going to take me 6 months actually took me closer to about a year and a month. And the reason why I'm making that comment is because sometimes we expect the stock market to act as an ATM. And in real life, the stock market does not act like an ATM. For those of you that are here with me that we've talked in the past, a lot of what we've talked about has been that plan on like a 3-month type of pulling money out or trying to live off the money. In all honesty, don't expect a monthly return. I have yet to see monthly gains every single month. I even offered once, I made this comment before, I even offered once like $1,000 to someone that could show me a gain 13 months. Every month they had a gain in their account. And no one took me up on it. No one was willing to come up, $1,000 cash in my hand, and no one was willing to say, you know what, I'm going to show you. Just never happened. So I have found that there are times the money doesn't come as you need it to, and that was disappointing. That bothered me. But the short answer is you usually need to find some reason above just the money. And let me put this into a perspective. If you were to ask me personally why I'm in the market, and I took a second to stop and think about it, it allows me freedoms I otherwise would not have, and the ability to help more when needed. And where I'm going at with that is the fact today. Today my father had a mini stroke, and I'm not sure how you define a mini stroke. In fact, the brothers are still texting back and forth. He's in CAT scans right now. But it was pretty easy for me to let my brother know, hey, what do you have next week? I can get out on a plane pretty quickly and be there tonight. And for me, that's what the market has done. The market, after being in it 18 years, has given me the ability to have some money set aside, has given me a job to work wherever I want to. It's given me the ability to pick and choose clientele. I no longer have to have whoever wants my services. I lived through that for a while, right? But the short answer is it's given me some freedoms. And when I thought about that on Memorial Day, it seemed to go hand in hand. So with that said, the next question I always get is, well, if you've made such good money in the past spread trading, why do you collar trade? So if you made such good money in the past, why don't you continue to collar trade? Excuse me, continue to spread trade instead of collar trading. And why would you think I'm doing more collar trading now than spread trading? It's really a pretty simple answer. But why do you think I'm doing more collar trading now than spread trading? More volatility, definitely more volatility since 2008. And that is definitely true, Maud. But go a little bit deeper than that. Why would I be doing more collar trading now than spread trading? And it is directly related to volatility. But I'm looking for something different. Maybe you're saying it the same way I mean it, or the same way I'm thinking of it. My first reason is I can't afford to see those drawdowns that occur with spread trading. You could have some huge drawdowns, like 30% of the profit in your portfolio. And then Maud hit the second one, collar trading. And I'm going to go ahead and put this in here, dollar figure wise, makes tons more money. When you stop trading for nickels and dimes and quarters and 50 cents and spreads and you're making returns on dollars, all of a sudden, seeing Baidu go from 115 where it's at now all the way up to probably 150, 155-ish, a $40 gain on something like Baidu on 2,000 shares all of a sudden becomes an $8,000 profit. And it's those type of gains that maybe I've grown somewhat accustomed to, or something that I look forward to. A lot of us have had a nice return this year on Disney. It's nice when you see a stock finally pop. Now it's giving some of it back, but the move is that Disney's still going to go higher. And it has some significant movement higher. So I like the big pops. I like collar trading where you get big money, where if I had an $8,000 move, or my expectation here on Baidu, a $40 move on 2,000 shares could be an $8,000 gain. All of a sudden, I have a real money return that sets me up for a year, where I can be a little more aggressive. But for a year, if I had to pull some money out to make some payments and make things happen, $8,000 would cover me basically for a year and a bit. So I mentioned Baidu. As I'm contemplating, looking at the way things are going, Baidu has gotten crushed. Even though there's nothing that's really worrisome on Baidu, even though they just missed top, bottom, and guidance for the first time since 2005, it's trading 25% lower since its mid-May results. 60%, I think it's closer to like 64% below its all-time highs. It's still continuing to enjoy about 7% of the market share of China's search market, being the Chinese Google. It is doing well with its video streaming. It has money makers all the way across the board, yet it's trading at a dwarf size 20 times the 12-month forward PE. Normally, it trades at about 55 times. It has traded in the 80 times range. But to put things into perspective, what a great opportunity we have with Baidu. As I went through and worked their numbers, pretty amazing. Pretty amazing on what it has, what its revenues currently are, opportunities within the new lines of business that it's creating. I guess, how do you say it? It's creating new revenue streams, and some of those revenue streams can be huge. Profits still look okay. It's doing everything right. It's doing everything right, and it has a pretty good opportunity. If you work through and read through this article, you can check the numbers. I already did. Pretty good opportunity to at least bounce back up to that 150 very quickly, meaning within a week. Within 2 weeks, it could really move. If you ask me part of why we're doing what we're doing, we're in the market, you have to enjoy the market, the research, and the work it takes to be successful. And I kind of like it because I've got that military mindset. Now, I'll be honest with you. If I lost everything I had in the market, it would hurt, but it wouldn't kill me. So it's not fair for me to say that that I can't afford to lose, or that losing is not an option, because that's not true. I'm not going to lose my life. If I lost everything in the stock market, life would be much more difficult, but it wouldn't kill me. But with that said, if you're putting that amount of stress on you, there's a problem. There's a problem. You should never look at the market as losing is not an option, because you will lose in the stock market, which means you have to find ways to enjoy the market, to enjoy the research, to enjoy the time it takes to put into it. If I can use an example, a lot of people ask me, well, how long did it take you to get through an education like safe option strategies? And this is after doing previous educations, but it still took me in that 14 to 18 month range. I knew the strategies. I knew how to place them. I had to now change my perception on how to place trades, and to place trades no longer looking at how much money I was going to make, but looking at trades on how I was going to place them and what I was going to do, or my plan is what I was going to do if things went wrong. And as I made those changes, I paper traded, even though I knew the strategies. As soon as I went through the first strategy, the long calls, I placed them differently. I spent 2 months going through long calls and long puts. I spent a couple months going through short puts and short calls, doing naked trading, putting in a position where I could see the numbers, being a numbers guy, where I could see the numbers and see how devastating it would be to my portfolio to see things change on me. Yes, even though I already knew everything, it still took me about 5 months to get through level 2. I then went through every single strategy, and it took me 4 to 6 weeks. A couple I could put on at the same time. They were similar, but I put them on the way I wanted them to go. I put them on the opposite way so I could adjust them. I put the work in that it takes to be successful in the market. I'm going to let you in on a little secret. You just can't rip through someone's education and think you got it. Listening to someone teaching you something is night and day difference from becoming a doctor, being an engineer, and constructing bridges. You can't just listen to it and think you have it. It takes the effort to put into it, to practice it, to paper trade it, for a year, even though you already know it, but to go in with a different mindset, to retrain your brain to look at it, not how much money you're going to make, but oh my gosh, what am I going to do if it doesn't go the way I have planned? It's a different mindset, and it takes, for some people, years of practice to reset that mindset. I truly love what I do. And if I can do it for other people at the same time and get paid for it, I'm in heaven. I know the system works. I've seen it work through pre-2008. I see it really work through 2008. And no one can catch me since then if they're in 2008, because of how well we did in 2008 and how it set up for the next 10 years. I enjoy being able to sleep at night, meaning I don't need a black swan event that's going to eat away half of my portfolio. No, that does not mean that I'm always protected. There is some risk in trading. Don't think that there's not. But the risk far outweighs the rewards. If people are going to ask me where I think our market's going to end this week, I don't know. I can't give you an explanation. All I can tell you is we're going to see some headlines from China. We're going to see some headlines from the US, but more importantly, look towards Europe and Great Britain to see about England, I guess, right? To see about what they're going to do with their Brexit exit, as they've shifted some of their power and their voting abilities for their government. Looking at the Dow, I still see a bearish market. In fact, I've got an article. This is the most bearish we've been since 2011 by consecutive negative weeks in the market, which is probably only 4 or 5, but 5 negative weeks in the market. The S&P 500 technically is January. It's the wrong one. So let's get the right one in there. It is also technically bearish because we're right in the middle. If you take a look, we can't be more in the middle. The Series 1 wave matches right up with the 50-day. We have the 200-day right here. It's holding a standard series deviation of 2 on an Elliott wave or a Fibonacci wave pattern. We're below our central pivot point. It's just uncertain. With that said, we are oversold on an institutional basis on buying of shares. And obviously, if we pull up our NASDAQ, it is mostly going to mirror those three. If I was going to ask you which index is the most important and which one matters, which one would you tell me? If I was to ask you which index is the most important here, what are you going to tell me? Abraham says the SPX. Dave W. and Lance also say the SPX. Mary's the SPX. Anyone think differently? Maud says the NASDAQ. Ooh. Maud, thank you for being different. But actually, the S&P 500 is the index that matters most. The benchmark is the S&P 500. That's a big enough batch, 515 companies? It's a big enough batch that's the benchmark that you're held against. Really, the Dow's not too important. It's only 30 stocks. Yes, it's shown because, I don't know, because the analysts think it sometimes is important, but it's not. The NASDAQ has definitely become more important, but you're not benchmarked against the NASDAQ. You're benchmarked against the S&P 500. So really that S&P 500 index is most likely the most important index because it's the benchmark for performance. It's the benchmark or the model for most, if not all, technical analysis, as well as the model for portfolio construction. For whom is the Dow more relevant? Institutions? The Dow's not relevant. In all honesty, the Dow is more of a classic, how would I say it? It's a little piece of history that's an interesting tradition to follow. So the Dow is nothing more than mirroring and maybe the original traditional 30 stocks as the stock market opened. Again, no one really used it. It's a tradition that you see that, look at the indexes. So you look at the Dow. The S&P 500, that is an institutional benchmark. And again, the S&P 500 is where most model construction is based off of. All right, NASDAQ's bearish. As we continue to look through this week, I'm going to say we're going to be negative in June. I really have no idea, but my first inkling a week before we enter June is we're going to go through some summer doldrums. Earnings this week is the second week of retail, Abercrombie and Fitch, Dick's Sporting Goods. Hopefully they'll go out of business. Guess, Palo Alto Networks, PVH, Tilly's. Thursday, Burlington, Dollar General, Dollar Tree, Express, Dell, Gaps, Marvel, Uber, VMware, and Costco, I think, is in there. Big Lots on Friday. Not a whole lot of economic reports. That's where I'm going to pay attention to news. News on China, news on England and how they're going to exit the European Union. Is it a hard exit? Is it a soft exit? Are they going to renegotiate? Pretty pathetic that they chose to exit, and 3 years into it, they haven't found a way to exit, or for that matter, how to reconstruct or renew treaties along the same lines that they've had before. So pretty pathetic. Internationally, we have the China, and that's really off there. Cut. On Friday, we have some China non-manufacturing or the services PMI as well as the MBS manufacturing PMI. If you ask me how I'm looking to trade, I'm still rolling out or extending out protection from earnings. Interesting Baidu article that we somewhat have gone over. China would benefit from a positive response to U.S. trade complaints. I did not put this in one last week, but I have it here for you this week. Dow rising other points, but hosts longest weekly losing streak since 2011. So here we have this one. Just an interesting thing that I observed. And some new bipartisan retirement bill that clears and moves closer to becoming law for IRAs and for savings and for small businesses. So pretty interesting article on some changes that are going to be occurring in our tax law. And then again, another interesting article I found on Bank of America that justifies, and all the numbers are correct, on why my favorite bank is Bank of America, even though JP Morgan during this time period has most likely been the best. There's just more opportunity for Bank of America, even though it hasn't come yet. But I want you to be able to see and read the numbers that I see. Questions. What questions do I have for you on this holiday? Actually, let's do it. Let's reverse that. What questions do you have for me on this holiday? Any questions? If not, can I suggest go out and barbecue? Go out and have a good evening. I appreciate you taking your time here on a day off to spend with me. If I was looking for an opportunity, Bank of America and Baidu would be at the top of my list. I also like the way Under Armour has held its 50-day. Costco reports on Thursday, and Costco usually will have a big run up and a muted return on earnings, or it'll have no run up and a great return after earnings. So I'm interested to see how that one's going to play out. If I see Costco being dragged down or pretty stagnant, I might look for a Costco trade Thursday morning on an earnings play on Thursday with Costco. But other than that, anyone else here? All right. Well, hey, I appreciate you being with me, spending a half hour of your time this evening. I will have this posted this evening since the markets are closed. I don't have some of the ridiculous restrictions, and I'll get this posted. I appreciate you being here, everyone. Have a good evening, and I look forward to talking with some of you tomorrow. Jeff, I did get your text, and I will work on getting those responses to you tomorrow as well. But the short answer is shouldn't be a problem. We should have everything taken care of for you here tomorrow to get going. Guys, take care. Have a wonderful evening, and I'll see you tomorrow night or Thursday morning. Bye-bye.